Hello traders, welcome back to my YouTube channel. Thank you so much for clicking. Kindly remember to subscribe, like and comment down below. So today we're going to be looking at which liquidity to focus on. So when it comes to liquidity, I like to focus on three different types of liquidities. So I've already defined what liquidity is. If you have not checked out my video, kindly go and check out my video on my definition of what liquidity is all about. So I like to look at three forms of liquidity that I like to focus on. So I'm looking at the euro dollar 1 week chart. So I like to focus on number one, the weekly highs and lows. So when it comes to weekly highs and lows, these are the major liquidities in the market which the smart money is focusing on. So this is the same liquidity I want to be focusing on. So actually I've learned that smart money is focused on the 1 week liquidity and the daily liquidity minimum. But we'll also be looking at session highs and lows. Session highs and lows are those highs and lows that occur during maybe could be London session or New York session. So when looking at the weekly chart, as you can see, we have some various forms of liquidity here. So we have buy side liquidities and we have sell side liquidity as an example. So when, for example, this week, when we enter this week of Monday, 21st November, we see that the market was taking out this previous week low, but it was also taking out inside fair value gap. So you want to couple your liquidities with either fair value gap or an order block that can be used to propel the market higher into buy side liquidity. So the market will always be moving from a level of sell side liquidity into another level of buy side liquidity. So you want to be engaging from this level of sell side once it's taken out. So this is the most discount level you can be in, and then you want to engage this market into a premium level of maybe this old high that now we are using as our buy side liquidity. So in this instance, the market took out this liquidity inside this fair value gap and then it moved higher, taking out the buy side. So if you engage maybe a buy, for example, you want to be getting out when it's taking out this buy side liquidity. So another level that I like to watch, maybe you can enter into the daily chart. I like to watch the daily liquidity. So if we have no near time weekly liquidities, we can be focused on the daily highs and lows. So for instance, in this instance, for example, this sell side liquidity right here, we see that the market was moving from a buy side liquidity after taking out this high of 15th November 2022. After taking those buy side liquidities, it now drove lower into this imbalance, and we have also a bullish order block right there. So you have to couple your liquidity with a significant level in the market, not just looking at liquidities alone. So your focus should be on the liquidity that occurs inside a significant level. So you see that the market came down to fill this imbalance and enter into this order block, but at the same time it ran this old high, old low down here, taking it out, and that's how the market resumed higher. So we see that before the market moves, it has to move with liquidity. So another example we are seeing here is from November 8th, early November, we are seeing that the market was driving higher, but then it posted above this buy side liquidity, and then it retraced down to take out some form of sell side before driving even higher. So the market really can't move without taking out liquidity. So another instance that I like to look at is session highs and lows. So when I'm talking about sessions, I think when we are talking about sessions in ICT concepts, you should be familiar with the various sessions. So we have the Asian session, we have the London open session and New York open session. So those are the essentials that I'll be focusing on when discussing liquidities. So for example, in this day, this is Monday 5th December 2022, we're seeing that the market took out some measure of Asian session highs before dropping. So this was a down day, so we were bearish this day, but the market before dropping lower tried to come back up, take out this Asian liquidity, which was also the previous day. I think it was a Friday, previous Friday's high. It was taken out, then the market drove lower. So on Tuesday we are seeing that the same thing. It took out some sell side here, down here, then drove higher to take out this buy side, which is also Asian highs. Then it dropped lower, so it was a bearish day. But before going down during that day, it had to take out some form of Asian highs, which is buy side liquidity, then drop. So the next day on Wednesday, we're also seeing the same thing. Before going higher, it was an up close day. Before going higher, it had to take some Asian liquidity, then drive higher to take out buy side liquidity from yesterday, which was also a New York session high. So you're also seeing some New York highs taken out this day before the market now retraced back down into discount. So guys, that's all about which liquidity to focus on. So I'll advise us those are the liquidities you should be focusing on. So from those liquidities, now you can frame your setups on the lower time frames. So that's it guys. Thank you so much for watching. Thank you so much guys for watching. I hope this video has been helpful. If you enjoyed this video, don't forget to like, subscribe and comment. Also let me know what kind of content you wanna see or any suggestions you have. Thank you.